So what made the American economy so amazing? What made us great economically? Well, there were a few things. There was inexpensive labor, which is long gone. There was inexpensive and plenty of energy and stable electricity, which in places like California, that's gone. You need people, you need energy, you need a stable government, you need stable prices. And when you put all of these things together, you have an explosion of growth of capital for everyone, okay? Well, we're now saying that the American economy is about to boom again. This is an actual story from Bloomberg. Shoppers are emerging from their cocoons and aspiring to switch it up from sweatpants and stubble and streaming. Right now, you ready? People are hitting the mall or watching a movie in a theater again. Retail sales are up almost 10%, according to the Commerce Department. Well, that's fantastic. The balance sheet is excellent, outstanding, coiled, and ready to go when they're ready to start spending money, said J.P. Morgan Chase. He was on a call with reporters. He said customers and consumers have $2 trillion or more in cash in their checking accounts, more than they did before the pandemic, and they're just ready to let it go. So, skirts, jumpsuits, and dresses at Kohl's and Macy's and American Eagle. Way up. Dresses, jeans. There's a new denim cycle, and people are going out for the first time and buying jeans. Bottles of sparkling wine flying off the shelves now. Champagne is through the roof. Now, that may be because of the Gavin Newsom administration. I'm not sure. Shoes are being purchased. Oh, my gosh. And even a higher replacement rate for sneakers. And finally, shaving kits. Yeah, shaving kits are through the roof right now. I mean, what more? Oh, well, you ask? Swimsuits. Swimsuits, dresses, shaving kits, and shoes. If that doesn't make for a booming economy, I mean, I watched Little House on the Prairie. I know what happens when Nellie and her dad, who owned the store, and they would come in once a year to buy shoes. Nellie would know we're going to be rolling in the money forever because the family just came in and bought a new pair of shoes. Next thing you know, this whole place is not going to be a prairie anymore. It'll be dress and shoe stores from here until the ocean. Okay, a great country was not built on shoe sales. Everybody needs shoes. When people start to come out of their house, they start shaving again. That's not a big purchase. Oh, man, it is if you're Gillette. Oh, man, they're going to be hiring so many people because now more and more people are just going to be shaving. Oh, Gillette's going to go through the roof. Okay. And the reason why I wanted to tell you that is because it's ridiculous, and I want you to understand the one thing that Jamie Dimon said from J.P. Morgan Chase. He said, consumers have $2 trillion or more in their checking accounts than they did before the pandemic. Well, that's great, right? We're saving money. Let me tell you the truth. When J.P. Morgan came out just last week with their financial report, they and all of the other banks reported something that has not happened in history before. How does a bank make money? A bank makes money by taking in deposits, paying you a little bit on that. So that's a losing proposition. How do they make money? Well, it's not through the deposits because they lose money on that. They maybe pay 1%. but they pay 1%, and then they loan that money out. And then what do? They loan that money out and they charge 6% for interest. And so they make 5%. Now, those are rough here, but that's how they make money. Okay? They make money by doing that. They make investments off of the profits that they have gotten. Here's the problem. Right now, the deposits just in JP Morgan Chase up 24% year over year, up 6% from Q4. So in other words, wait a minute. In the first quarter of this year, we're saving even more money than we were in the fourth quarter of last year. We're getting even more stingy. And loans by the banks are essentially flat from a year ago. They are down 4%. So the money they're spending, 24% up. The chance of money to make is down 4%. But that 4% down, that's really important. JP Morgan Chase had 100% more deposits than loans. And the ratio from loans to deposits have dropped below 50%. That's below 50% now for 3 quarters. What the hell does all of this mean? What does that even mean? Let me give you one more fact, and then I'll explain it to you. The other fact you need to know is the rate of loans is now down more than during the crash of '08. Do you remember when you couldn't get a loan? It's down now, lower loan rate than during the crash. So how is JP Morgan and all these companies making so much money? Follow me here for a second. They are trying to generate inflation, okay? The job of the Fed is to keep inflation at about 1 or 2%. We figure inflation entirely different now than we did in the 1980s or whenever you were growing up. We don't figure it the same way. We don't actually look at, gas. We don't look at certain foods anymore. We don't look at the things that were actually figured in. And I'm loose on those facts. I just know that they have taken a lot of the cost of living stuff and put them on the side. So you're not actually looking at inflation anymore. So what do? They're trying to get you to buy so the price of things don't collapse. All right? You have to have money circulating. So they pump all the money, the Fed pumps all of this money into the banks. The banks are supposed to loan it out. But if no one is lining up for the money, then what do they do with all that money? Well, they take it to where inflation actually does exist, although they won't say that. They'll put it, those banks, instead of loaning it to you, will put it in the stock market. So now all of this money that the Fed printed is going into the stock market, and the recipient of that money and all the profits are the big banks. So they are making money hand over fist. And they should, because the government is pretty much putting them out of business. Banks aren't lending to small businesses. In fact, Chase Bank recently announced it was going to cease, listen to this, cease all small business lending until the PPP funding that is part of the $1.9 trillion Biden plan is exhausted. So you go to the bank as a small businessman and you cannot get a loan from Chase. They won't loan it to you. They say just go to the government and get it from them. Well, I don't want it from them. I don't want any strings attached from them. Sorry, we don't do any banking now for small businesses. Commercial lending now has dried up all across the board. Working capital, commercial lines of credit, rotating credit. You know, every company needs credit so they can make payroll. And until they get all of the invoices paid for and everything that they had billed other people, till all that money comes in, usually 30 to 90 days, you need a revolving loan to be able to pay your monthly bills and to pay your employees. All of that is gone. Working capital, commercial line of credit business is almost gone. It's normally $1 trillion a year. It will be less than $100 billion this year. Why? Because government is just giving money away. The banks are guaranteed 6% rate of return for making PPP loans. So why are they not making any personal loans? Because they're guaranteed 6%. 6% return. And if somebody doesn't pay them back, the bank's not on the hook. The American government is. You want to talk about an insane way to run a country? This is it. By the way, this violates all of the principles of MMT, modern monetary theory, which is what we're doing now, which just says print money. We can just keep printing money and it's not a problem. The problem is one of the fundamental tenets of this insane policy, modern monetary theory, is that loans generate income. Banks make the loans then make income, and they pay the banks back, and so you have that continual system. Well, that's violated. That's over now. It's over. So what does it mean to you? Okay. This is what this means. First, make sure you have your money in a safe bank. So what does that mean? That usually it means a local or regional bank, but I prefer local. One that is not associated with any of these 5 big banks. The more local, the better. Get your money into a safe bank. And that it's important that it does not have an investor desk. Small business owners, entrepreneurs, you're going to have to get creative about how to get access to capital because banks are not doing that lending anymore. So if you're a small business owner, you may have to turn to equipment financing or invoice factoring as a means to get a loan in the next year. The Fed is going to start putting pressure on these banks, I hope, to get them back to lending. They can do this by offering loss guarantees, which is insanity. They did this in the 80s after the savings and loan scandal. They limit the dollars that banks are allowed to keep in reserve at the Fed. So remember what we did in 2008? We said you have to keep more money overnight in case loans start to go bad. They're going to start limiting the loss and start saying to them, you can't keep that amount of money in the bank. You got to change that margin. The big part of why banks are slow playing their lending right now is they are making money in the market, and it's bogus. It is bogus. They are not loaning this money out to you. They are putting it in the stock market. That's what's driving the stock market up. A huge portion of the existing loan industry portfolio is going to have to be rewritten and restructured because as many as 40% of all mortgages are going to have to be refinanced. Probably the biggest volume in commercial loan history. The loans that entered some sort of forbearance during COVID-19, they're behind so far, they're just never going to be able to catch up. They're not going to be taken. What's going to happen is Uncle Sam will come in and say, we've got to restructure those loans, which means the existing mortgages are going to get refinanced and extended by 3 to 5 years so you can make up for the missed payment and interest that you lost in 2020. That's a write-down that the banks are going to have to absorb. So having more cash on hand is vital to the banks so they can refinance all of their portfolios because of COVID-19. Same thing is true with student loans, car loans, but they both pale in comparison to what's happening in the mortgage industry. We're headed for more problems on that. Personally, I think this is the beginning of the destruction of the dollar and kind of a nice payday for the banks that are going to have to take a loss or a haircut on anything that they have in U.S. dollars, because we all are. This is a way for them to not feel the pain because they're making all this money now through free money that the government is giving them. You're not getting that same kind of treatment.